Hi, Econ 445. Hope everyone's doing well today. When you get this, it is Monday, March 23rd. So homework number 6 is due today, right? Okay, so I've had some questions about where our homework due dates. Kat, if you break this chair, I swear. Come here. My wonderful TA, Stormy. She's adorable. Anyways, people have been asking a lot of questions about when homework due dates are, so how about I just go ahead and share my screen and I'll show you where those are located on Blackboard. So let's put me down here. Boom. Awesome. Close out Zoom. So when we go to Blackboard, you know, we come into this screen. It has public sector economics. We do have our homework tab where all the homeworks are listed, and then we also have this tab about this course. Right here we do have a file called homework due dates that I had put up on the very first day of school. So in this homework due dates, we do have all the due dates for the entire semester. So for example, homework 6 was due today, March 23rd. If you need some wiggle room, don't worry about it. I know you all are dealing with your lives and maybe having to move or get to safety and things like that, and that's more important. So if you need some wiggle room, it's fine. In a couple days, once I do have most of them in, I'm going to record a video that goes through a lot of the different answers to these questions, and then I'll put that up underneath the homework file. Okay, and then the next homework that's going to be due is going to be on April 6th, and then we're going to have another one on the 13th, the 20th. I will be right back. My life under social distancing is a constant Nerf war battle. Anyways, on that note, we were talking about the homework due dates. So March 23rd, the types of taxes one is due on April 6th. So not this upcoming Monday, but the one after it. We're going to have one on like the state and local taxes and stuff we're going to go over today, a little bit of what we're doing next time, and then tax incidents. So those two are going to be together. After that, we're going to have property and retirement taxes, and then corporate and reform taxes. All right, so those are located there on your Blackboard. And then I'm assuming if you're watching this, you found out the fact that in taxation and revenues, we're having all the videos on here. So here's the one for types of taxes. Here's the one for moral taxation. By the time I'm finished recording this and put it up, we'll have the Illinois tax environment underneath that. And then a couple other things. So remember on your semester project that the selection of your policy topic has to be turned in by 3:25. Kat, I just want to record with the students. Okay, all right. So the selection of your policy has to be turned in by 3:25. Remember that needs to be a tax-focused policy at the state or local level, so it can't be a federal tax program. Okay, there you go, Kat. Let's go. And then we're going to have a rough draft that's going to be due on April 15th. All right, so I think that catches us up on most of the main things. Let's go to our Illinois tax environment stuff. So this is kind of fun. I'm not originally from Illinois. We all know that. I've mentioned it a few times. Recently moved here last summer from Georgia. So I got to learn a lot. I got to learn a lot in the case of these slides. So let's talk about what makes Illinois unique. So we're going to have 4 main categories that we're going to talk about, and this is going to be a lot of maps today. A lot of them are, all the maps are provided through the Tax Foundation, which is this really great organization that does research into every single state and local municipalities and figures out about their tax environment. So Illinois is unique in 4 main categories. We have individual taxes, business taxes, sales taxes, and property taxes. So the top individual income tax rate is 4.95% in Illinois. State and local individual income tax collections per capita are approximately $1,076. So that's a lot. That's a lot, right? State and local tax burdens are approximately 11%, which is the 5th highest in the United States. But on the other side, this might be a very high tax burden, but the Illinois Tax Freedom Day is April 24th, which is one of the earliest in the country. If you're wondering what the Tax Freedom Day is, every single state has the day in which all of the income and sales and things like that that have happened at that time would be enough to pay the year's taxes. Once we get to that day, that's awesome. the measurements vary drastically from April 15th. Ours takes about 9 days to be able to make the amount of revenue to be able to pay the tax burden. Some states can take multiple months. So that's pretty neat. What does that look like on a map though? So maybe I should make myself smaller so we can see the maps a little bit better. You know, we're gonna go up here today. Yeah, yeah. So we end up having really high state and local tax collection in Illinois. It's actually one of the most expensive in the country, especially when it comes to this Midwestern area of Wisconsin, Minnesota, Indiana, Ohio, Missouri, Kentucky. In this area, we definitely have some of the highest tax collections per person. Per person, the average person in Illinois is going to pay $5,764 in state and local tax collections. That's insanity, right? And then we also have to think about how much does our state collect in income taxes per capita. So how much is that income tax base for each individual in the state? And that's a little over $1,000. So that's more of an average for the area. That seems to make more sense. But then we go back and we look at how high is the state and local tax collections in our state, and we just say, wow, that is really high. So why is this so high? But our state and local income taxes per capita really average for what the region looks like. Well, that's going to be because of a wealth of other state and local taxes. So for example, we have business taxes. By far, we have the top corporate income tax rate of 9.5. We're ranked 36 in state business tax climate. That means we're not necessarily the most expensive, but we're up there, right? It's kind of expensive to be a corporation in Illinois. So when we're looking at this map, we see that the only nearby state that's going to beat us in the percentage of what their corporate income tax rates are would be in Iowa. Geography was not my subject in Iowa, which runs about 12%, but we're at 9.5%, which is still relatively sizable. Now, this is going to matter to these businesses and whether they're going to come into the state or if they're going to go elsewhere, right? Because there's some states such as Texas or Ohio or Nevada that don't necessarily have the same corporate income tax environment. So these businesses are not only affected by this corporate income tax rate, but they have what we would like to call the state business tax climate. So what is the tax climate like for these individual businesses? And they're affected by other things too. For example, property taxes. Now, what we're going to talk about later is that property taxes in Illinois are some of the highest in the country across the board. And it turns out that these really high property taxes are very bad for what the local business environment. So businesses may not want to locate here because it's both expensive on the amount of income that these companies are going to make, but it's expensive the amount of taxes that they're going to have to pay on the property to put their factories on or to put their businesses on or to be able to, or the residential and commercial areas that they're renting to be able to run their businesses out of. So we're also affected, or these businesses are also affected by sales taxes. So the amount that's going to be taken out at the register. If you remember, way back into your early micro days, tax incidence isn't always put on the consumer. Right? When you go to buy something at the store, let's say, what do I have here? When I go to buy a radio at the store, maybe it's listed at $24.99, but I might have to pay $26 at the register after taxes. Well, the amount of sales taxes are going to affect who really decides if they're going to go in and buy that product or not, right? Sometimes what corporations are going to have to do is they say, wow, those are really high tax rates. Maybe we're going to have to lower, not by the full amount of the tax, but maybe lower the price of this. So maybe this will instead be a $23 radio. To be able to adjust for being able to keep the same amount of people because their price is higher at the register, and that's going to affect demand. So when it comes to sales taxes, we don't necessarily have the best business environment either. It's relatively bad when it comes to state business tax climates and if companies are going to want to locate here. Now, those aren't the only things that are affected. So we have all the way back at the beginning, we have our individual taxes that we talk about, and it's not necessarily the cheapest place to live when it comes to taxes. Then we have business-related taxes. So we have the corporate income tax rate, but we also have the other taxes that they're affected by, the taxes that are going to be on their properties or the taxes that are going to be on sales when they're trying to be able to sell their goods and services. So what does sales tax even look like? Okay, well, in the state of Illinois, we have across the board 6.25% that goes to Illinois state taxes. Now, each local area can have their own sales tax rates that are put on top of that. For example, Edwardsville does have sizable local taxes. Average local sales tax rates are about 2.49% in Illinois, which is a little higher than other states. So state and local general sales tax collection per capita is about $888. That's a lot. And then we also have on top of that have gasoline tax. We have sales taxes on a lot of different excise goods, which we're going to talk about later when I show you some really cool, fun examples of excise taxes in Illinois. But what we got to think about is how much is what the state collects in sales tax per person compared to all the other states. So it turns out with the sales taxes, though they do seem relatively high when we put out those numbers, they're fairly average for what we're going to see across the country. Thank you for tea. It's not as high as what we'd find in Louisiana or Washington or Nevada, where there's extremely high sales tax rates. It's much more affordable in Illinois relative to these states. They're not as good as some places like Virginia or Oregon. So then we need to think about some specific parts within this. Let's think about grocery. So let me go ahead and turn this down. So let's think about grocery. In a lot of states, they realize, okay, we do have these sales taxes that we're putting on goods and services, so these things that are getting down to consumers. But we would still like to be able to help provide grocery, because maybe grocery shouldn't be taxed to the same amount. Most states fully exempt groceries. There's no sales taxes on groceries whatsoever. In Illinois, groceries are taxed at a lower tax rate, but it's not necessarily an untaxed item. But the taxes that we have on groceries are going to be on our raw fruits and vegetables. Our tax breaks on groceries are going to be on our raw fruits and vegetables. They're going to be on your rice, your grains, things like that, but not processed and packaged foods. You can't buy fried chicken. Or, for example, sodas and candy. These are exempt from the breaks that we have for grocery taxes in the state of Illinois. So then we also have to think about property taxes. Okay, so we've talked about our income taxes, we've talked about our business taxes and what these other taxes kind of calls for the environment for businesses on if they want to locate to an area or if they want to hire, or if they want to bring their business there. Then we started talking about sales taxes, the ones that affect them right at the register. But we also have to think about property taxes. So property taxes, for the most part, are going to be paid on the physical location, so the land that something is located on, and the properties that are located on that land. States also have the option of putting property taxes on a variety of other things. Maybe your boats, cars, helicopters, a variety of other things. So property taxes paid as a percentage of owner-occupied housing, so just on the housing that owners live in, is about 1.95%, which is the second highest in the country. That is so expensive. State and local property tax collection per person is about $2,120. That's about as much as the average low to moderate income family makes in a month. That's a huge amount of money that's going to property taxes in this state. Oops, I pressed on the wrong button. So when we look at how much does your state collect in property taxes per capita, we are by far the most expensive in the Midwestern area. Our rates are higher. We do not necessarily have the most friendly environment when it comes to property taxes per capita. Oops. So we've talked about all those categories, but does Illinois end up having taxes on anything unique or anything strange? Honestly, these are the ones that I find kind of fun. This is why I'm a tax economist, so I find it kind of enjoyable. So we're going to think about this a little bit. Well, the first one's going to be the idea of sports betting, but we also have things like state taxes. We have excise taxes on a whole wide variety of things. Remember, excise taxes are when we put a specific tax on an individual item. So let's think about it. Illinois is one of the few states that actually currently have a tax for sports betting. So being able to bet on a horse race or being able to bet on a basketball game. And 15% of the revenue that you make doing sports betting is going to be taken in tax collection by the state. What? That means if you're hanging out at the casino having a really good time betting on sports, you better make sure to put aside some of this as an excise tax. Taxes are going to have to be returned to the state on top of other taxes that you might have on that income. We also are one of the few states that actually have an estate tax. So these tax rates go for different amounts, but the more money that you have in the event of death, the higher the tax rate's going to be before that can be passed on. And this is a tax on your estate before it goes to the next generation. We also have a variety of excise taxes, especially on alcohol. So Illinois is kind of strange. We're pretty center of the board when it comes to the severity of our excise taxes on different types of alcohol, but they're definitely there and they're definitely present, right? For example, we're 19th in champagne taxes. So on the dollars that we're taxing per gallon of champagne is about $1.39. When it comes to beer, it's about 23 cents per gallon, $1.39 when it comes to wine. So that's taxed at the same rate that we tax champagne, because champagne is a type of wine. That distinction is actually not made in a lot of individual states. But we also have distilled spirits, which we have a fairly high tax rate on that as well. For each gallon of liquor that's sold in Illinois, there's an $8.55 excise tax on it. What? That is so much. We also recently got recreational marijuana here, which we have a marijuana excise tax that's coming in. So it's a 10% sales tax and a 7% excise tax, and a 10% excise tax flowers with less than 35% THC. I'm not exactly sure what that means, to be honest, the percentages of THC, but we do have high excise taxes that are going to be placed on marijuana in the state. We are actually one of the only states that currently have a statewide vapor tax. So for people that end up vaping, we have a really high gas tax, one of the highest gas tax in the nation, of 54 cents, 54.98 cents per gallon of gas. That's why you're seeing on Facebook right now, as we're going through this sort of like gas crisis, that some other states have gas that are finally under $1 for 99 cents, and yet I still paid $2.21 the other day. It's because we have very, very high total gas taxes in this state. So overall, this is just a short lecture to kind of get you interested in what does the Illinois environment actually look like, so that we can start having some of these discussions. It's also supposed to give you ideas for your proposal that you need to give me. So you need to give me a topic of which tax you want to talk about by the 25th, right? To be able to get your 5 points. Get your free 5 points. It is so easy. Do it. But this is supposed to be able to gear some of this. So you know the things to start looking at are different sort of revenue generating taxes that are happening within the state of Illinois, or any state of your choosing. You can also do local taxes too. I'm completely fine with that. But I'm going to give you some food for thought, because what we've talked about for the last 20 minutes or so is just a whole bunch of different taxes that Illinois has. And what we've seen is that it doesn't necessarily have the most friendly tax environment. So what does that mean? What does that mean for people? Well, it turns out that we actually have one of the lowest, if not the lowest, inbound migration as a percentage of total movers in the state. Our taxes are both really, really high, and the amount of new people we have is really low. So what do we do with that? Well, if we want to maintain being able to have the same payments, and we want to be able to maintain the same projects, if we have less people, or we don't have really an increase of people, but we have an increase of projects, then we have to raise taxes. That's something that we have to think about. But also, what we've seen is through all these additional taxes and things like that, a lot of the money that's spent in Illinois is actually raised locally, which means that we have one of the most moderate to lowest dependencies, or the amount that we rely on federal aid programs to be able to keep our state running. So we actually build a lot of that money in-house instead of getting block or matching grants from the government, from the federal government, which is a really interesting thing to think about. So it's just kind of food for thought. Are taxes necessarily bad if we're able to raise money for most of these projects in-house? Or is it driving out people because we see that migration is really low and people don't necessarily want to be in this tax environment? There could be multiple effects that are happening here. And when you get to your policies that you're choosing for your tax policy brief, those are going to be questions that you need to start thinking about. What are the effects of this tax? Is it causing people to want to come to this area, or is it driving people out of this area? Is it funding interesting things? Are we able to do this mostly in-house, or are we going to have to raise from other sources as well? So today was just a really short day. you're dealing with a lot. I know that we just got back from break, and we're trying to get through this and learn about this together. Now, this is the course content that we have for the state level information. Once I do get in a majority of the homeworks, I'm also going to put up a short video that's going to give you the answers to homework 6, and we're going to work through those problems together so that you're able to go back and look at it as many times as you need to before we get to the final at the end of the semester. So that'll be also a section of your class. So that's why this is a little shorter today. I hope everybody's doing well. Reach out to me if you need me. You should have gotten an email with me returning back your expenditure policy brief and your midterm. If you have any questions on either of those, let me know. We can set up a meeting. We can meet by Zoom. Also expect an email from me within the next day that's going to be looking at what are my Zoom office hours, how to connect to that if you want to be able to know more information or when there's going to be drop-in times. Okay. All right. Well, I hope everybody's doing well. Enjoy the rest of your day. The weather's kind of pretty outside. Maybe go sit on your porch. But remember, wash your hands, stay safe, distance yourself socially, because we all want to get through this as quickly as possible. All right, have a great one. Bye-bye. End meeting.